Friends, how are you? Igor Pechkovsky is here, Windermere Bellevue Comments, your trusted real estate advisor. Today we have November, almost end of the year, market update for you. I'll tell you everything there is to know about real estate. I'll walk you through all the numbers in just a little bit. And in the end of every segment, we'll compare the numbers to what we had a couple of months ago and how did interest rates influence the market. I want to show you that and what you can expect going into the end of the year and beginning of the year. So no overdue, let's get in. Please like this video, subscribe, share it with your friends. It will help us a lot. And if you have your thoughts, comment below this video. I appreciate you. Let's get going. Friends, let's start with one and only the east side. Bellevue, Redmond, all the beautiful places on the east side. So we'll go and let me tell you. So inventory is right at around 1.5 months. Not too much movement there. At the bottom, you know, when the market was at the hottest, we had only 1 or 2 weeks of inventory. Today, we're a little over 1.5 months. Everything that is between 1 and 3 months, this is the seller's market, make no mistake. So 1.5 is a decent amount compared to what we had in 2021 in comparison. But it's not that much of inventory, so the prices are relatively staying the same. The median is 1.420, so 1,420,000. It came down a little bit because at the bottom of the market where we were in the end of last year, a year ago we were at 1.3 mil. We went all the way to 1.5 during the summer, and today we're a little over 1.4. So the interest rates do make an adjustment there, but make no mistakes, 34% of homes sell over asking. These are super competitive. Bidding wars? No, the median price, the median percentage from the original list price is only 4%. It's not much, but I always say if you're looking for that great house, well, guess what? The 34% of buyers are looking for that property as well. So all of the buyers are looking for that property as well, but 34% of them sell over asking. So that's something to keep in mind. So guys, we're at the end of the year, and on the east side, it's kind of time just to look through the last couple of 4 or 5 months and how did the market perform. So as you can see in this table that we put for you, July, August, September, and October of 2023, as the interest rates grew, right? Because I thought like 6.5, gosh, like that's really expensive. Now I'm like, can we please have 6.5? So as it went from 6.8, 7, 7.2, and 7.6, the rate influenced the price. The price went down from 1.5 mil to 1.453, 1.427, and 1.420. And you have a very good example here on this amount, right? You have the principal and interest is growing. So the interest rates are changing the market. We need the interest rates to go down a bit. We'll talk about that in the end, but that's what it does. But besides the price, it does the secondary thing, which is I don't necessarily care that much about the price up, down 30 grand, but the numbers, we have a fewer new listings that are resulting in fewer sales. So the sales numbers are down 30% year over year. And that's a big number. Let me explain. So if you've been shopping for a house recently, you probably noticed there are not that many good houses. And the question is, why so? Well, because sellers are buyers too. And we're going back to this chicken and egg approach where we make a lot of off-market offers too for our developer clients and some of our retail clients. And I bring a really good offer to the property owner and they say, Igor, I love the offer, the number is great, but where do I go? Their mortgage is locked at 3% interest rates, sometimes even below than 3%. So now they have to say goodbye to that, and now they have to go and buy a better house for whatever they're looking for to move at 7.62% of interest rate. So for that reason, they simply are prisoners of their home in a way. They're not moving, so the sales declined by 30%. But if sales decline by 30%, it means that you're the buyer, assuming you don't own real estate, you have fewer options. And if you have fewer options, when the good house comes in the market, it usually gets 34% of them get multiple offers, so they sell just fine. And that's why I wouldn't be waiting too much, because I don't think the prices would be dropping necessarily, just because there are fewer sales and fewer listings on the market. Please in the comment let me know if it makes sense, if you agree or disagree. I want to know your opinion. Let's go into Seattle. All right, my friends, let's bombard through Seattle. We'll make it quick. I made a point just in the segment below, so let me know if it makes sense. But Seattle, 1.8 months of inventory, right? It's funny to see the graph, because as we live through the years in real estate, you could see, 2018, we had almost the same amount of inventory as now. Then rates started dropping. In 19, they were like 5%, and 20, they started dropping to 4.5, 4, and so on. And that inventory decreased and disappeared, and prices skyrocketed. So rates, when they go down, real estate price go up and inventory goes lower. So right now we're kind of in the same short period cycle, 1.8 months of inventory, because rates are quite high and it's a question of when they go lower. But not to debate here too much, but you got the point there. So the median price is right on the money, 900K. I think that's kind of the same that we had. Peak of a market, we were at the mill, then 950, and right now Seattle is right around 900,000. But same as on the east side, actually amount of multiple offers increased by 5%. So we were at 29 the previous months, and 34% sell over asking in the months of October. Median percentage over asking 4%, not too bad. 6 days on the market. That is, guys, a seller's market. Let's compare to the previous months. So as you see on this table, guys, the numbers tell the story, right? July, August, September, October. Let's compare. The rates started going up, and the price actually just being the same, 900K, 926, 900. So the payment grew by $500, so that's a lot. So it does become more expensive to buy real estate. But the prices in Seattle, actually, Seattle is doing really good. It always does. Amount of sales dropped by 23% year over year. That's very, very typical. So where I'm going with this, I'll tell you in a second. Let's talk about Snohomish County first. Friends, Snohomish County will make it fast. It does just fine. 1.3 months of inventory. That's not a lot of inventory. Like, it's actually pretty freaking low. The price stays the same. We're right around 730K. Pretty much the same as it was last year, so not big difference. And as you see, we still have 26%, a quarter of houses sell over asking. That's what I always say. What kind of a home you're looking for? The best one. Well, the best one sells over asking. But those are maybe one or two offers, 2%. So if you have $700,000 home, we're talking about $14,000, $15,000 over asking to win the house. This is the time you were winning. You want to be winning, because a year ago or a year and a half ago, you were willing to bid 200 grand and your kidney over asking just to get something, and today is only 14K. So guys, this is the time to get some deals. Let's talk about the future. So my friends, should you be buying today? I do believe so, if you can afford it. My formula for successful purchase in real estate and anything pretty much, if you like it and you could see yourself living in it in the next 5 to 6 years and you can afford it, buy it. What does it mean? The rates, again, if you can afford the rates as they are, go ahead and do it. You saw, I just showed you what happens when rates goes down, inventory starts disappearing, prices start to rise. So today, if you're buying a house in Bellevue and your median over asking for a great house is 4%, that's like $30,000, $40,000. 1.5 years ago, it was $240,000. So go get yourself a house if it makes sense. I'm buying, I'm looking. We just bought something last week. So yeah, what does the future brings? We'll see where the rate goes. As you've seen just recently this week, the stock market skyrocketed higher because we believe that Fed gonna stop increasing the rates, and maybe this is the beginning of the rate drops. There is a lot of optimism that Next year, spring, we'll start seeing rates drop before elections and all of it. We shall see. But even with the rates as they are today, there is not going to be that much inventory so far because sellers are buyers. So if you find that great home and if you can afford it, call us, let us represent you, and we'll get you inside of that home and you will be the owner. So please share, like this video, share it with your friends. Let us know if you agree, disagree. Put your thoughts in the comments. We appreciate you and talk to you soon. Thank you very much.